Good afternoon to everybody. Welcome to this great session. I think we should appreciate WAP for reserving the last session for the best. This is actually the best session. You'll agree with me that if we don't have financing in place, the right financing, the right structure, the right size, the right package of financing, we wouldn't have all these projects that we are talking about. So first of all, my name is Johnson Mowasi Kilangi, and together with Christopher Nixon, we chair the finance chapter of the World Association of PPP. And today we want to bring to you quite a number of insights as to how we can innovatively structure our projects so that they can attract the right form of financing. To do this, we are bringing to you a diverse panel comprising of professionals from the lending side. We have representatives from commercial banks and also from the sustainable finance space and also from the advisory in the infrastructure space. So this is just to help us showcase innovative and novel solutions that have worked, whether it's on the structuring of projects or it's on the financing of these projects. So to help drive this discussion is my co-chair, Christopher Nixon. So I'll welcome Chris to take on from this point, and I'll jump in at later stages of this session. Thank you.
Thank you very much, Johnson. And fantastic to be here in Abu Dhabi. It's especially meaningful for me. It's the place where I did the first PPP deal in my career, which was back in 23 years ago. It's an independent power and water project, which is you can see when you take off the lander from the airport, called Al Tawila. I've had just a brief introduction to myself. I've had a journey through banks and PPP units and sovereign wealth fund, both on arranging and advisory side. And it's really a delight to welcome the panel today. I'd like to just introduce each of them in turn as I ask the questions. I'll start with our sponsor, so Commercial Bank of Kuwait, Mr. Kunal Singh. Yes. So, Mr. Kunal, you have 20 years experience in the fields of international banking, debt syndications, project financing, investment banking, M&A, debt restructuring, debt and equity capital markets, equity research, and various other sectors across many industries, manufacturing, real estate, education, and others. So, warm welcome to you. My first question is, you joined Commercial Bank of Kuwait in 2015, I believe. So, in that time, I think you must have witnessed a huge boom in PPP in the region, and it's really one of the success stories globally. What are your thoughts from a financing perspective of how, what are the ingredients of success? And also, how has CBK become attracted to this space?
Sure.
Yeah.
First of all, thank you very much for having me here. It was an extremely good and informative last 3 years, meeting with various people from different parts of the world and sharing thoughts in terms of the kind of PPP projects or the project financing structures they have. So it has been very, very informative. So that's I'm quite delighted about having here. Yes, 2015, that was the time it was still picking up in the region. Although PPPs have been there in the region for a very long time, but the last 10 years have seen a massive growth. And that is reflected even from the attendance which we have here for last 3 years. Now, Kuwait came up with its PPP law in 2014, although there was a law earlier and there was a project which was awarded before that. But they revised the model. They came up with a new model in 2014. And since then, there was one of the project which was awarded, and it is close to the completion at this stage. And we are proud to be the lead arranger for that project, and it was one of the most success story. It's one of probably the largest wastewater treatment plant in the region. So we've been involved in those projects. And this has not been easy from the bank's perspective, right? I mean, especially for the local banks, it is extremely challenging. We don't have the appetite for a longer tenor facilities. Generally, the PPPs you'll find roughly around 15 to 30 and plus years. So obviously, if you're lending for that kind of a period, we need to have a borrowings also for that kind of a period, which is so there is a natural asset liability mismatch. And for the local banks, it becomes even more of a challenge. And there had not been many banks. There were us and a couple of other banks which have been involved into it. So when we started off on this project, it took a fair bit of time for convincing the internal teams, and it all boils down to the structuring, right? I mean, so what kind of a structure are you going to have? And these structures we try to reduce the risks as much as practically possible. Like for example, the tenor risk. It's been the major concern for the banks. So, and we could not get the mini perms at that point of time. The government was not willing to get agree for it. So we got a step up pricing. So that's in a way softer way of getting the mini perms also into it. Then this particular project, as per the PPP law of Kuwait, the 50% of the equity has to be IPO'd soon after the project is completed. So that is we thought was fairly unique in the region. Yes, I do know there are a few other countries also do have it, but that's something which I found it to be quite interesting because one, it also reduces the risks or the exposure for the government side of it. They will be able to do more. At the same time, some of these projects, like the wastewater treatment plants or other IWPP projects, although it is for the consumers, but the general consumer on the street may not be fully aware of the benefits from those. So when they are IPO'd, they are into the market. Obviously, they are also party to it. So they feel responsible from the sustainability contribution perspective as well. So that's another thing which I found it to be quite interesting. And the good thing which we found in Kuwait was there was a continuous dialogue between the lenders as well as the CAP, the Kuwait Authority for Partnership Projects. That's the special authority which was created for overseeing all the PPP projects. So there has been a continuous discussions between the lenders and them. So they have been very supportive for the cause of the lenders. And now we find that there is a shift from the other banks' perspective as well. And for this particular project, we had a number of other international lenders. That shows the acceptability of the risk from the international players. So we have 6 banks, 2 local and 4 international. So it was a success story, and we feel that once it's always the starting point is a challenge, right? And post which it becomes much more relatively easier. So we are quite confident that going forward there will be more projects. They're already in the pipeline. The discussions have started. There is a curiosity from the general public about the IPOs. So we are quite confident and quite excited about the projects. And I guess that's the way to go forward.
Yeah, excellent. Thank you for that introduction. Covered quite a bit there, so I think hopefully we'll come back in details to some of those aspects. I'd like to introduce my next panelist is Justo Algaba. He's head of infrastructure finance for MENA North Africa and Turkey at HSBC Bank Middle East. Justo has been based in the region for over a decade, I believe. He's over 15 years experience in the infrastructure sector. He's contributed to the development of multi-billion projects across various jurisdictions, mostly GCC and Spain, and asset classes, including power and renewables, transport, education. He's also sat on both sides of the table, providing financing for these projects, but also on the advisory side. Justo, when you're preparing projects, it's very important to do a market sounding. So perhaps I could start with asking you to give us a market sounding. How are the current conditions for financing in the region and globally, and how are banks responding to the challenges of 2023?
Yeah. Thank you, Chris. So actually, I was part of the advisory team on the Heightened transaction that Kunal alluded to. As you said, I have been on both sides of the table, on the advisory and the lending, and across various assets. I always thought to leave the region somewhere else, but this region is just too active and too interesting, and I continue to be here after 12 years. I don't know if that will eventually happen, but the pipeline is really, really interesting, and I think, Chris, that is one of the main characteristics of the region today. HSBC has offices across the globe. We have Tokyo, Singapore, Hong Kong, London, Americas, and the most active pipeline is definitely here. We have seen a very successful procurement model. I'm going to focus a bit more on the GCC, Chris, because obviously there are other countries in the area, and also the definition of MENA region is slightly loose. Some people include Turkey, some people include Egypt, even Uzbekistan, Azerbaijan. So I'll focus a bit more on GCC, given that we are in the UAE. So the model that has been banked has been extremely successful. Mostly the focus has been on the power and utilities space. No surprise, because we have very specific characteristics in the region. We have a young population which is growing, and our habits of consumption continue to demand more water, more electricity, more transportation, more digital infrastructure. So that is definitely pushing the needs and increasing the demand for these projects. As I said, the bankability it's now following a repeat method. Most banks are very comfortable with the risk allocation. And we have seen that success in the PNU space also translating into other sectors, but I will not divert into that now. We see that from a financing perspective, there is a pressure at the same time. As Kunal said, it is sometimes difficult to match assets and liabilities. These projects are financed under 15, 20, 25, even 30 years tenors. Clearly, that is a difficult ask for banks, even more so when the banking regulation from different authorities adds more pressure for long-dated assets. It becomes more costly, let's say. So therefore, there are some financing features which help bridging the gap. For example, the soft mini perms, as Kunal mentioned before. We have seen other financings like the hard mini perms as well, especially in the UAE. But still, there is a considerable pipeline. So far, the banking market, or let's say financiers, not only commercial banks, because we have ECA and DFIs and other players in the industry that help. So far, the market has shown a lot of resilience, but there is a constant and daily question mark as to what is the bank capacity or the financiers' capacity to continue funding these projects in the market. I'll leave it for now there, Chris, as my initial remark. Happy to elaborate on any of the points down the line.
Brilliant. Thank you, Jose. So I'll next I'll introduce Kristalina Lira from Natixis Corporate Investment Banking. She is in the structured finance division for Middle East, Turkey, the Caucasus and Central Asia. She specializes mainly in transactions supported by export credit agencies. She has 12 years cross-functional working experience both in project and corporate finance across Dubai, London, Milan and Albania. And she offers a wide range of perspectives when it comes to structuring deals. She's a master's in infrastructure finance from University College of London, and I'm pleased to say it's a CP3P certified from APMG International. Kristalina, I want to start really with focusing on your area of expertise, which is export credit agencies. Could you just give us an overview of the products which are available from export credit agencies and how and when they can be useful for financing PPPs?
The introduction and also for having me in this esteemed panel. Export credit agencies have always invested heavily in infrastructure and also in PPP projects. And they have invested both in emerging countries and also in developed countries. They are no longer seen as a lender of last resort when there is no private lenders willing to lend, but now we see more and more ECAs being involved also in developed countries. In Europe, we see a lot of ECAs being involved also in the GCC region, and of course they continue to support projects in emerging countries. Especially in times like this, we heard also from the other panel that there is a difficult moment for the world. There are geopolitical pressures, inflation is very high, interest rates are very high. In these kind of conditions, turbulent economic conditions, ECAs tend to be very active in developing and helping the economy move forward. We saw this during the pandemic, for example, that ECA played a crucial role. However, as the name suggests, ECAs are there to help exporters. So they are backed by governments, and their main mission is to help the domestic businesses to go abroad to sell their services and their products. So their main focus is not project finance. However, project finance can use ECAs because not any I don't think PPPs can be developed within a border of a single country. They need to procure services or products from other countries, and usually from developed countries. And that is where you can tag along also the ECAs of that specific country. That's the support from ECAs can then come in different shape of forms. First, there is direct financing from ECAs done at better conditions that the commercial banks can offer. Another product that some ECAs can do, that they have a funding arm, and by that they can fund and provide liquidity for commercial banks, and then commercial banks in return can fund the projects at better conditions, because they don't have to rely on the commercial bank liquidity costs themselves, but they rely on the liquidity cost of the ECA. Another thing that is very important in today's market is that ECAs can provide subsidized interest rates, and they also can provide fixed interest rates. And this is very important in the moment where we have such high interest rates that are impeding the projects for moving forward. And then the most common product of ECAs that we are used to see very often is the insurance. They provide comprehensive insurance, both political and commercial risk. They are able to provide political insurance also. Sometimes in some countries there are economically and politically troubled, so to say, and there is no private insurance going there, or even if there is a private insurance, it's going to be so highly priced that it is not making the project anymore viable. And then for commercial lenders, having an ECA in a deal, especially on some kind of projects, it makes or it breaks the deal. So they are very important because commercial lenders, when they have an ECA, they book their risk on the sovereign risk of the country of the ECA. So the fact that you will have a reduced risk, it means that you can offer a better conditions, and you can offer longer tenors to the projects, as Justo also mentioned, and also Kunal, that one of the main challenges at the moment is that commercial banks cannot offer very long-term tenors. However, with having an ECA, you can do that. Yeah. And so these are some of the benefits, so to say, and some of the products that different ECAs are able to offer to PPPs and project companies.
Thank you, Kristalina. That's a great introduction, and I'm keen to ask some more questions about how the trends in ECA finance as well, and what's coming down the pipeline. So next panel guest is, I'm going to introduce Mr. James Cook. James Cook is Executive Director and Head of Tribe Advisory at the Tribe Infrastructure Group. And if you don't know who Tribe Infrastructure Group is, then you did not attend our networking reception on Tuesday night. Thank you very much, Tribe.
My pleasure.
James, before Tribe, you were a project director at the Abu Dhabi National Energy Company. You were involved in greenfield power and water development projects. Before that, James was an associate director at Ernst & Young in Abu Dhabi within infrastructure and project finance, and you've previously served as a commercial manager at United Utilities PLC in the UK. Delighted to have you here today, James. As the only advisor on the panel, or the only pure advisor, you advise both developers and procurers. What are you seeing in the market, and how are your clients responding to some of the challenges? Is it business as usual? 2023, 2024. Are financial solutions evolving, or dare I say it, regressing?
Okay. Can everyone hear me? Thanks, Chris. Thanks everyone for. Thank you for inviting me on the panel. Thank you to WAP and congratulations to WAP, by the way, and Ziad and Jean-Christophe for a fantastic event. I think an amazing 3 days. Also, thank you to everybody here that's managed to stay this late. I think you've got a fantastic endurance. I think often called the graveyard shift. I think the very last shift before the closing ceremony. So thanks for staying, and hopefully we'll keep your attention. I want to just sort of concur with Justo in terms of anyone that works in the PPP industry and the PPP business, which hopefully is most of us. I think the GCC and the MENA region is, in my opinion, I'm obviously massively biased, but in my opinion is the most exciting region globally. I think there's more projects going on, more diverse projects, multitude of sectors, and it's still relatively in its infancy, apart from, as you say, sort of power and water that have been around for a while. So fantastic. So I implore all of you to come and get involved more in projects here, because there's loads going on. And I think what comes with that is a challenge of capacity, and capacity across all aspects of the supply chain, from qualified contractors, qualified investors, lenders, advisors, procuring authorities. It's not possible to go from very few projects to 100 PPP projects in over a space of 2 or 3 years. It's not possible. So I think there's some of the challenges we're facing. So when we advise our clients, and those clients are governments or developers, I think one of the key points we try and get across is there's actually a lot of competition there. So if we're advising a procurer, and we're doing that quite a lot, we're saying, look, you're competing against other PPP units or against other countries for their capital. There's not an unlimited supply of equity. There's not an unlimited supply of debt finance. So you need to structure your project to make it as attractive and as bankable as you possibly can. So really the sort of the days of let's just shove all of the risk onto the private sector, let's make them responsible for everything, and we'll just sit there as a procurer and have no risk. I don't think that really works, because when we advise bidders bidding for projects, and we go out to banks who are going to finance these projects, there's a pretty quick checklist that they'll go through in terms of, does the project have A, B, C, D, E? Because if it doesn't have those, I know that there are 5 or 6 other projects I can lend to or invest in that do have those attributes. And I'd much rather participate in those projects than in the projects that are not structured well, without the correct credit support, et cetera, et cetera. In answer to Chris's question around is it business as usual, I'd like to throw it back to him and say, what is business as usual? But only because I think the GCC is massively diverse, and what is business as usual in Abu Dhabi is not the same as Dubai or Oman or Qatar or Kuwait or Saudi. They're all very different. They all have different attributes. Different funding sources, different funding solutions. As an example, I did my first project in North Africa earlier this year. Now, I had no experience of North Africa, but luckily there were some people in my team that did. Hence, that's how we were awarded the project. And I had no idea what it would be like to raise $1 billion in this particular North African country. I naively thought, well, it's going to be a real struggle to raise this amount of money. I couldn't have been more wrong. We had too many options for structuring the deal. So we had an ECA option where we had some ECA direct funding with some ECA cover. We had a pure commercial option of European banks offering debt in US dollars or in euros, and then we had a local currency offer as well. So we had to then essentially choose between one of these three different funding solutions. Obviously, all of them have different pricing considerations, different terms and conditions, different risk allocations. So while there are loads of challenges, there's lots of opportunities for well-structured deals, and capital is out there, but it's not one size fits all. I don't think there is a business as usual. I think it depends where you are, who's doing it, and who's involved.
Great, thank you. Right. My last panelist, the last one, certainly but not least, Mr. Dawood, Dr. Dawood Bastia. I'm going to read a part of his biography, but I do note that he wears several hats. He's an EU affairs specialist who partners with energy companies to help them manage the transition to a sustainable enterprise. Dawood has been nominated to serve as a member of the European Commission's Platform on Sustainable Finance. He's also a co-director of the Executive Education Certificate of Advanced Studies in SDG Investing at the Geneva Graduate Institute. Dawood holds a PhD in International Relations and Political Science from the Graduate Institute of International Development Studies in Geneva. Dawood, so you've been extremely busy this week, not at our forum, but out at the wider World Investment Forum. And I believe you've moderated a 2-hour session on international sustainable funds, and you've participated in a session on sustainable finance. So perhaps for the benefit of our audience, you could give us a brief about what's been discussed out in WIF regarding sustainable finance, and just give us a sense of the general mood of the conference.
Chris, thank you so much. Thank you so much, and sorry that about the confusion about the wearing so many hats, but I'm a millennial. Like, that's what we do. We need to have 4 jobs, to survive, and just different times. But going back to this panel, I really wanted to congratulate you guys for WAP's success. Every time I pass here, this room is always full, while other are relatively empty. So it really shows the magnitude of the interest in this particular sector. And I'm not very much involved in PPP, as Chris said. I'm much more involved in what is going on in terms of sustainable finance. But I really hope that during this panel we will be able to find how green and sustainable finance can help structure deals, and if any of those deals are fitting the criteria that are now being developed worldwide. And now going back to answer your question, Chris, what is happening? So there's so much happening that we probably should have a separate panel on that, but I'll try to really put it into a short summary. So there are several things happening worldwide, and they're happening at the same time. Different financial markets, the largest financial markets, are working on a qualification system of what is sustainable financial asset, what is a sustainable economic activity. And a lot of those regulate using different methods, yet somehow they're trying to coordinate it and unify it across the globe. The reason why this regulatory push is happening is because of the financial need to finance SDGs. We're talking about trillions of dollars every year, and with every year, this challenge will be exponentially more difficult to finance. So we know that the public funds are not enough. The regulators, the states, came to a conclusion that they need to reach out to private funds and channel some of the money into what is called sustainable activities, sustainable companies, and sustainable financial products, like, for example, fixed income products. And the question is, why would you do that? We all heard about the ESG investing and all those frameworks that are present in the markets for 20, 30 years. Well, the reason is that the ESG framework just fell short of delivering impact and fell short of being resilient to greenwashing. Okay, so a lot of those assets are being sold as sustainable, yet they have been designed to simply identify particular environmental, governance, risks and social risks. So now there are several major initiatives. One would be much more prominent in let's say US, India, based around acronym called TCFD, Task for Climate Disclosures. There is a very big push in the EU that we can call under large umbrella of sustainable finance reform, which is basically the EU decided to regulate this market heavily, top to bottom, okay? What they did is they wrote a very, very thick legislation that really shows and creates a criteria for every economic activity out there and defines what is sustainable. So for example, if you are building a solar plant, all you have to do is simply open this file and check criteria for solar plant development, right? And if your investment meets those criteria, you can do several things, right? First, you can issue a bond or financial products to finance the capex going for that, right? And this capex will be labeled green, will be labeled sustainable, okay? If you already have an asset and it is generating a revenue, the percent of this revenue that is going through that sustainable asset will be considered a green revenue. And it will label your company, if it's, for example, 60, 70% of the whole company's revenue. So imagine that there is a, I don't know, energy generation facility and they have some coal, they have some wind, and they have some solar. And if solar and wind are 2/3 of the company's turnover, then the company is 70% sustainable, to simplify things and round numbers up. And what we also did is that we have cracked down on every financial market participant to start reporting how much of their portfolios and how much of their loan exposure are green, okay? In short, it means, because I need to probably wrap it up, in short, it means that there is a, everyone used to be standing in a pool and now the water is falling down and we need to check who has pants and who doesn't, okay? So you need to start reporting according to same rules. And so we started finally comparing apples to apples, and we will see how much of the economy is green. And for now, those numbers are very low, okay? Which means that there will be a large demand for assets meeting those criteria. And we believe, this is my personal opinion, that a lot of money will be looking for those assets. And they not necessarily need to be in the EU itself. So I'll just stop here.
Thank you, David.
For now.
I think what you've been describing really touches on the next round of questions, which is innovation. What's happening in your area clearly is extremely innovative and very new. And I wanted to start touching on that subject with the rest of the panel. Kunal, can I come back to you? I think I'll probably ask two questions at this point. together. And just firstly, you mentioned features in Kuwait of some of the PPP deals. One, for example, was the use of an IPO in the equity, or mandatory IPO. That I think is it's not unique, but it's not necessarily common. I wonder if you could perhaps take us through that innovation, some of the other innovations, and then secondly, you have a debt capital markets experience, so I'm very keen to benefit from your ideas on how access of the debt capital markets can scale PPPs either in the region or globally.
Right. So, yeah, as per the PPP law, Kuwait's 2014 law, 50% of the government share or the project company has to be IPO'd soon after the project is completed. Although I don't think there is a specific timeline, but it just says soon after the construction period is completed. So already for one of the companies that was IWPP, that was already done, and it was fairly well subscribed. The second project, which is going on, the wastewater treatment plant, should also be completing very soon, and the discussions have already started on the IPOs. So what it does is obviously reduces the exposure of the government on one hand. At the same time, it involves the general public on these projects. So that's on the IPO side of it. On the debt capital market, right now there is not much of a bond issuances which we see, but that's one of the options which has to be considered if we have to attract more lenders to these projects. Like for example, as a bank, I may not be having an appetite for a very long tenor, but then if I am able to, if the project company is able to do a bond issuance after the construction period, obviously the risk significantly reduces, and then there are larger participants who can join on those, and that gives an exit for the initial debt providers like the banks like ours. So this helps us in managing our asset liability concerns as well. And from the investors' perspective, also they would be getting a long-term sustainable dividend. Dividend on coupon returns on the bonds. So they have those options as well. The another thing which is not yet done, at least in the Kuwait market, but that's something which I thought is there in several other markets like infrastructure or PPP funds, right? So if there are, again, this is from the private players' perspective, not really from the government's side of it. So if we have those infrastructure funds or the PPP funds, wherein the funds can participate in these infrastructure projects, that helps in increasing the availability of the funds and the success of the projects as well. So that's another thing which I felt could be thought of. Like we definitely have these ECAs, and like Christina has also mentioned about it. So those are extremely good tools which are used. And I always feel that there has to be a diversification of funding sources for each of the projects. Like there could be a clean facilities, there could be ECA-backed facilities, there could be other facilities. So it gives an option for the banks to pick and choose which ones they want. And there's always a challenge on the single obligor exposure as well. So that way the banks is able to manage some direct and some through the ECA cover. So I believe the diversification of the funding sources should also be there in each of these projects.
Thank you. I think suddenly you've highlighted some options there, and I think that probably echoes what James said. Is that the options are there. Justo, maybe I can ask you about innovation. Your thoughts. I mean, I think innovation can take several forms. It can be innovation in structure, it could be innovative products, sources of finance and strategies. Would you say that financial institutions or banks are always receptive to innovation, or under what conditions can they be the ones who are instrumental in innovation?
Yeah. Thank you, Chris. Look, I would say it's important to remember that we are talking about project financing. There is a non-recourse or a limited recourse structure where financiers are injecting the funds, and sponsors obviously as well, but financiers are injecting the majority of the funding, and they will have no recourse or very limited recourse to the sponsors. That is the framework, which obviously we have to remember, because then that makes financiers slightly less receptive to changes or to innovations. Of course, we all have to be open-minded. There is no one size for all. There have been very successful procurements on the power and utilities space, for example, but that doesn't mean that we can replicate that model exactly to others. Now, that cannot be taken to the extreme, and I have seen some conversations with some sponsors where, for example, they said, okay, look, we have this, I don't know, for the sake of argument, SAF or e-methanol project. Why don't you guys finance it? There is no offtake so far, but we think it's okay. There will be buyers. So that is definitely taking the argument to the other extreme. You are asking lenders to take a risk which they are not prepared to do so. And the fundamental principle behind project financing is that each party should bear the risk which is better prepared to do so. Therefore, while yes, there should be innovation and we should be flexible and ready to accommodate to different sectors, geographies, etc., we cannot forget that fundamental principle and the fact that financiers are looking purely at the cash flows from that asset.
Thank you. I think it's very important that we hear that message. But I just want to ask you one more question, Justo, before we move on. I think it can be argued that global financial institutions like HSBC have a role to play in disseminating best practices across the world. We're a World Association of PPP units, and we hope through our associations that we can do that. Do you think it's a challenge to replicate financial solutions across different countries and markets, or is it something which banks like HSBC are in a position to enable?
Yeah, great follow-up. So that's actually part of our day-to-day. I'm sure it is the same, for example, for Kristalina, large financial institutions with a global footprint. We have the benefit of having teams across the world. The drawback is that our inbox doesn't stop. We have always inbox in and out throughout the day. But the benefit is we have access to our colleagues either in the same sector, on different geographies, or different departments, let's say. So in some occasions, we have to really look at how a model that worked in a particular geography could be applied to another one, or whether sponsors who have very strong expertise, let's say in Australia, they can also replicate that in the region. We have seen it in multiple folds. One of them from a sector perspective. We all know that power and utilities have been the cornerstone of project financing or PPPs in the region. For many years, there was a talk whether that could be replicated to other sectors. And thanks to the job of advisors like James, obviously that successfully migrated into other sectors like social, education, even healthcare now. So that is expected to continue to happen. There is another quote-unquote analogy, for example, on the green hydrogen space. This is a completely new sector. We don't have a market of green ammonia. I know it's not PPP per se, but anyway, if you allow me to drift slightly. It's a new sector where there is no market. You cannot really replicate a precedent because there is no precedent. Now, maybe you can take a little bit of LNG, a little bit of renewables, and that is actually how those new projects are coming into place. So yeah, I think it's actually part of our duty, Chris, if I could say it, for large financial institutions or advisors to pull those connections together and try to come up with a holistic view that could be replicated elsewhere.
Thank you. That's very good to hear. Kristalina, so coming back to ECAs, so I think you mentioned that structures are evolving and that there are some changes. I think the OECD arrangement for export credit agencies has been in place for quite some time. Perhaps you could outline for us the changes which are coming, what options there are, what the effect will be. And just as another question as well, I understand you've done some quite interesting work, and Natixis has closed a deal in Uzbekistan recently. If you could also give, if free to talk about that as well, please. Thank you.
Yeah. Thank you, Chris. So before answering your question, I would like to make a distinction between OECD countries, ECAs, and ECAs, export credit agencies. They are evolving in the market lately. They are not governed by OECD arrangement. As you said, there has been some very positive changes in terms of OECD guidelines. As a reminder, and as you rightly mentioned, it has been in place for some time, and they were first created, these guidelines, to create a level playing field for all export credit agencies in order not to create and not to allow unfair competitions between different exporters. And in the beginning, they were not made, these guidelines, with project financing in mind. So it was very complicated to offer export credit agency support in project finance. However, thanks God, with the time, a lot of changes have happened, with the most important change happening in July 2023, so this summer, where there has been a general modernization of the OECD consensus. And the reason why the participants decided that they needed a radical change of this arrangement were several. First, to allow a flexibility in terms of financing in order for projects to face better the economic challenges that they are facing recently. Secondly, there is a competitive landscape that exporters are dealing with. As I mentioned earlier, there are also export credit agencies that are not governed by these rules, and they can be much more competitive. And then also a very major reason why these guidelines changed was also to enlarge and to incentivize the support for green projects. So the main changes that have happened in the guidelines that really affect project finance are, first, there is a extension of the maximum repayment terms. Now we have no longer category 1 and category 2 countries, but all countries, they have the same repayment period of up to 15 years, whereas before it was just 8.5 years for developed and high income OECD countries, and a little bit longer, up to 10 years for other countries. And another very big change that happened was that the sector understanding that had very lengthy eligibility criteria for no-recourse project finance has been deleted, and now projects have the same rules as other type of financing, so they benefit also from longer repayment terms, but also from more flexible structure in terms of repayment and other conditions that are related to them. And another change happened also in the rail infrastructure. There was also before a sector understanding for them that was deleted, and now also rail infrastructure are part of the same rules as any other buyer's credit. And what's more is that any transport rail infrastructure that is low or zero emission is benefiting also for even longer repayment periods, up to 22 years. And another major change that happened is enlarging the scope of green transactions and environmental friendly transactions. So now different sectors are included, such as CO2 capture, energy, sustainable energy production. We have clean hydrogen and ammonia. We have zero and low emission transport, as I mentioned, low emission manufacturing, and clean energy minerals and ores. And all these sustainability projects, they benefit from longer repayment periods up to 22 years, whereas before was up to 18 years maximum. So this, of course, will help PPP projects to be involved, to have more support and better support from ECAs. And to answer your second question, which is related with the non-OECD ECAs, we see in the region a lot of export credit agencies there are emerging. We can mention Etihad Credit Insurance, which is the export credit agency of UAE that is being very active in the market. And we are very glad to say that we closed the first ever transaction, project finance transaction in Uzbekistan with a cover from ECI. And we think that this is going to pave the road for ECI, for the Etihad Credit Insurance, to go on other project finance and to do more coverage and other types of support for PPPs. Thank you.
Thank you. I saw David's eyes light up there when you started talking about the trends in ECAs. I can see some further conversations happening there. So I'll just move on again to James. James, you heard from Justo how banks, on the whole, like to follow precedents, not necessarily take on new risks. As part of your role, I'm sure you're trying to push, new structures to banks and on behalf of developers and procurers. Any tips? I think, firstly, any tips for how to achieve that in today's market, and secondly, also, what are the innovations which are most sought after at the moment by your clients?
Okay, thank you. First of all, I think banks should just take a lot more risk. Sorry. No, it is very difficult, and as Justo said, the structuring of project financing, when you're talking about innovation, how much innovation has there been in project financing or PPPs? I'd say it's relatively minimal over the sort of 20 years I've been doing it. The structures are pretty much similar, but they've evolved over time. But the core principles of project finance, which is a concession agreement or an offtake agreement, a bankable EPC, a bankable O&M, shareholders, financing facilities, that's relatively consistent for the past 20 odd years. I think when we look at the financing for PPP projects, I think we've got to make clear distinction, obviously, between the debt side and the equity side. Obviously, there's the two principal sources of finance. Obviously, you can have some stuff in the middle. You can have some mezzanine type structures in the middle, although they're relatively rare in this part of the world. I'll just sort of talk a little bit about some of the things that we're seeing in the market, and we can decide whether they're innovation or not, but we'll talk about those. So a lot of the decisions around structuring a project and a lot of the decisions around what a developer or an investor can do when structuring the finance for the project, it will very much start with the procurer and who the procurer is and how they've set up the tender on the assumption that it's a government tender. So what things that we see relatively often in this part of the world, so you may have a government shareholder in the project company, either a government shareholder or a government-related entity shareholder. So obviously that's relieving some of the burden on the investors to provide all the capital, but it also skews, that some could perceive there to be some sort of conflict by having a procurer or a related entity to the procurer in the equity. Some foreign developers find that actually buys them a little bit of political protection. So I think that's a feature that's relatively common or not uncommon in this part of the world. And then, of course, we talked about the mandatory IPO of equity, I think, in Oman and in Kuwait as well. And that's something that the Omanis have done successfully. And I think that's a good way of engaging the public into infrastructure projects. It's not without its complexities. As a developer investing into a project, you don't know the price of that IPO when you go to sell down. So that brings in some added risk. So government equity is a key feature in this part of the world. One of the things that has been incredibly prevalent over the last probably 3, 4, 5 years here is the use of equity bridge loans for equity. So for those that are not aware of this, developers, instead of actually putting in their equity, they borrow the equity from banks. So essentially they can enter into a project without having actually put any money in because they've just borrowed some money from a bank. Now that EBL will sit on the corporate balance sheet of that developer and can extend way beyond the construction period. And we're seeing this more and more and more. So we're seeing a lot of corporates in the region very exposed. Obviously, the senior debt is non-recourse to the sponsors, but these EBLs are very much recourse to the sponsors. So I think we've seen a lot of sponsors now looking to repay those EBLs. They're coming to their maturity, and that's causing a little bit of a squeeze on the balance sheet of these developers. So that's something that, whether it's a good innovation or a bad innovation, I'm not going to give my position away, but that's something that we've seen very recently. And just on the Kunal's point of infrastructure funds, I think there has been a bit of a lack of success of infrastructure funds in this part of the world. There have been some small ones, and I know there are some big ones entering the market now. But I think it's quite hard, and again, it goes back to the way the procurer sets up the project. If under the concession agreement you have a 10 or 12-year equity lock-in period for your developers, it's very hard for an infrastructure fund, which will probably be a 10-year closed-end fund, where they need to deploy their capital and then recycle their capital within the term of their fund. It's very hard for them to look at a project that probably has a 2-year procurement program and a 3-year construction program, because that gives them a pretty limited window to then sell their investment to get their capital back. So I think this goes back to procurers. What I said at the very beginning, if you're trying to attract capital, which I think they are, I think you need to look at provisions like your equity lock-in provisions to allow infrastructure funds to participate in these projects where I think they're struggling. Quickly on the debt side, I won't take too much. Quickly on the debt side, there's lots of different ways of structuring debt, and I think the mini perm term was used before. Essentially, three most common ways of structuring debts: long-term amortizing. You've got something called a soft mini perm and something called a hard mini perm. And I think one of the best things, and probably one of the most innovative things, that was the question, wasn't it? Innovation. Yes. One of the most innovative things is one of the procurers in the region. Government procurer has decided that they will structure projects on a short-term financing basis. So even though the project might be 25 years, they say there'll be a mandatory refinancing after year 5 or year 6. So it's only a 5 or 6 year loan with an amortization profile over 25 years. But the procurer will take the price adjustment of what that refinancing is. The intention there being either refinance with another senior debt tranche or ideally with a bond. And I think giving developers that comfort that upon that refinancing, your tariff will go up or down depending on the pricing of either the bond takeout or the senior debt. I think that, first of all, opens up a huge amount of liquidity from the banks, because banks would much rather lend for 5, 6, 7 years than they would for 20, 25 years. Pricing is obviously going to be cheaper, and it de-risks the pricing, de-risks the project for the developer, so the pricing could be sharper as well. So there's a couple of innovative things that have happened recently.
That's actually a good example, yes, I fully agree. That deal in particular is a good example indeed.
Yeah.
Good. Okay, thank you. That's quite a comprehensive answer. And
I took notes beforehand.
Okay.
So.
Very good. We've probably got time for one last question from my side before we either open up to Q&A or give Johnson an opportunity to ask a question. David, I think from after, yeah. Interested in your opinion. Do you think banks and funds are on the same page? Are there differences in how they might approach a project? And secondly, with so many initiatives, how do we ensure that investors are connected to the right projects? If that makes sense.
Good man. Well, not an easy one, huh? A curveball to conclude. Well, I would have to properly think about that, but I'll tell you one thing that I know for sure, and this is a little bit to reference to what Justo said and what we are observing in the market, and you would probably need to interpret it how it impacts the PPP deals. So, a couple of points. The biggest wave that I see is so-called transitional finance, right? So a lot of companies are being forced to decarbonize and transform. And we see that this might be one of the largest asset classes, much larger than the actual green assets. And the reason why it is so interesting and important that it will, in many cases, those projects will be in the space that Justo just described. Let's take an example of SAFs or green hydrogen, right? We see that in the regulation, and this is actually a puzzle for, I think, the whole panel, right? We see in the legislation that will tell you that in 5 to 10 years, the 40 or 50% of the hydrogen in industrial processes needs to be green. I mean, it's an unimaginable amount of hydrogen, right? So on one hand, we can be sure that there will be an offtake, right? But on the other hand, you just don't have the technology. You don't have enough electrolyzers. You don't have enough wind and solar power to generate overabundance of clean energy to power those electrolyzers, right? So how do you construct that and finance the deal that doesn't have an offtake? That's why you have a lot of players that are industry or legacy players like large energy corporates that are investing in those projects for different reasons, right? Because they have, for example, an ETS or cost of CO2 emissions growing exponentially. So they will be very keen to maybe take part in financing of those deals as a player that can also guarantee an offtake of this hydrogen, but not necessarily want to finance it as a whole. And another point I want to make, and this is more on innovation side, that a lot of companies and a lot of players in this area are not sustainable today, and they're looking at a pathway to become sustainable. And this is where all the capex expenditure is coming in, because this can be easily financed by green bonds, green loans, and they are offering lower interest rates. There is a greenium, and there has been a lot of research proving that indeed there is an oversubscription for those assets. I was working with an energy company that issued 500 million green bond, the company that is definitely not sustainable, but they managed to issue a sustainable financial assets that was very, very successful in the market. So again, that we are in a very particular point of time where we see that there will be a lot of money going into new technologies, very complicated and risky projects. But we see the pipeline to offtake this whether it's SAF or green hydrogen, because we see the regulation framework changing. I don't know if I answered your question at all, to be honest, but I just wanted to give you the spirit of what's happening, and you guys need to interpret it if it fits the PPP puzzle at all. Yeah.
We can certainly throw that open to the audience as well. I think, the message Johnson, I think I'll allow you to answer a question or to open it to the floor, but I think certainly the message I have is that there's no shortage, and this has been throughout the 3 days, there's no shortage of finance or options, and there's even there's potential new options for access to capital. We also have, but there tends to be a shortage of bankable projects and being prepared, and that's maybe something which we could explore with the panel before, if we still have time. I think we've probably got another 10 minutes, 5-10 minutes. So over you to Johnson.
Yeah, thank you very much, Chris. And of course, our esteemed panelists for that insightful conversation there. Listening to the conversation, of course, it's reasonable that because we are seated here, the event is hosted here, the conversation will be skewed towards, the JCC region. I think one of the reasons why we have the WAP is to be able to deploy solutions across the globe. We have members and PPP units across the globe. And I think the billion-dollar question will be, how do we innovatively move capital from capital surplus regions to capital deficit regions? And I think the discussion around innovation comes in, whether it's structuring the financing solutions and whether it's, it's structuring the project. And of course, that leads me to the other issue that I was thinking. We are, of course, skewed towards the private sector side. But we know that the public sector side has a significant role to play that will determine how you can efficiently deploy this innovation into the project. So I think that's an area that I'll want to hear from the panelists. And I think I can start with you. So just to get your views, being a global bank, what do you think is the trend with regards to you looking at projects, in the emerging markets? And what do you think governments and PPP units need to do in those markets so as to make their projects attractive to global banks like yourself?
I think we may need a separate session for this one. This is a deep question, very deep. But look, Johnson, in my view, and of course we have this conversation constantly, not only for countries like Kenya, for example, Tanzania and others, also Egypt is part of the region as well. And the economic or the macro environment of Egypt is very challenging, same as Turkey, for example. But now I guess your question is more focused on countries or jurisdictions which traditionally didn't have as much PPP. First of all, my advice number one would be tap first into financiers who already have presence in the country. It is extremely challenging for a financial institution, especially banks, let's say. Perhaps Kristalina can comment on the ECAs. I'm sure they have more flexibility. But commercial banks, for them to take a view on a project, on a jurisdiction where they don't have presence is extremely difficult, regardless of the strength of that jurisdiction. So we are seeing, for example, now many sponsors from the GCC going into Uzbekistan, for example. But if a financial institution doesn't have the presence there, it becomes very challenging to finance that country, even though they have a very robust procurement model. That would be advice number one. Second is, you have to build the track record. It is very difficult, and especially we see it again on hydrogen. We moved from pilot plants to multi-billion-dollar developments. That would be very difficult to swallow for the financiers to go into a new jurisdiction, or let's say jurisdiction with less track record, and moving very quickly into giga projects. I would say creating a contractual framework with a reputable financial advisor who can bring in the expertise, say the likes of a tribe or the likes of any legal advisor as well. That's one, creating that commercial framework, and then build that background and track record step by step and moving gradually through the infrastructure chain, because I'm sure there are many needs and we don't need to jump directly into the multi-billion-dollar development.
Thank you, Justo, for that feedback. I think it's also fair that we also open this session to the audience. So I don't know if there's anybody with a question. we're actually going to make it mandatory for this group to ask questions. We're not going to leave you out of this session. So please feel free. We have about less than 10 minutes. We have this panel.
While we wait, can I just
Yes,
add one
please.
thing? So I think that because you put a very important question about the taking the funds from surplus countries to those that are lacking it. So whenever you are thinking about your project,
into uncharted territories to countries that they have never financed before. And that's why I stressed at the beginning of the panel that that's why export credit agencies are important, exactly to go on those uncharted territories and to cover the political risk from a jurisdiction that you do not know, that you never had any experience on. And then that's how you can maybe build the track record, and then you can move forward to other kind of forms of financing and attracting more private lenders in the country. But as I said, as a first step is going to be the framework, and is going to be the right legislation in terms of PPPs.
Great. Thank you very much, Kristalina, for those views there. I think it will be fair to conclude. I think we've eaten a few minutes of the time for the next session. But let me take this opportunity to thank all the panelists for your immense views and thoughts around the subject topic. I'm sure we can continue on with this conversation. And that is why myself and Christopher are here to make sure that the finance chapter will be there to showcase some of these innovations, some of these solutions. And so we welcome you all to join the finance chapter. Of course, quite a number of initiatives we are going to be running at the WAP, and we hope that through those we can apply some of these thoughts that we've had from our esteemed panelists in making sure that we can unlock sustainable finance for projects. Also, let me recognize Kunal and the team from the Commercial Bank of Kuwait for sponsoring this great session. This could not have been possible without your support, and of course, the great support of my co-chair, Christopher Nixon. So thank you very much, and I hope this was insightful to all of you. Thank you.
Thank you.
Thank you.